Hello, everybody, and welcome to the Plus3 Futures and Commodities show. My name is Ben Maldonado. We are recording here on the last day of April, April 30th. As always, I'm here with my partner, Barrie Hederachi. How are you, Barrie?
Doing pretty well, Ben.
I would think so after the week you had. Really on top of ES. And
It was a good week.
yeah, wrote it down nicely. It was a good week, ending on the lows, which I posted a tweet about that. That's pretty much bear market behavior. You make a high early in the week and a low at the end of the week.
Mhm.
That's liquidation. Anyway, we're going to get into that in depth. We always start off with Bitcoin, which we see as a proxy for risk. Interestingly enough, Bitcoin was relatively mild this week compared to what we saw in the ES and the NDX and the equity markets.
Right.
Not bullish by any means, but muted decline. It's sort of still channeling here within this triangle.
Mhm.
It's heavy. You can see it's heavy. We tried to get above here a few weeks ago, a month ago, couldn't hold it. Came back up, tried again, tested, and failed. And that failure is an important signal that the sellers are still in control, and whether it's this week or next week, as it gets sort of squeezed into this triangle, between the full square and the 42.3 area, 42,300, and the bottom of this triangle, which is around the 37,600. Ultimately, I think the weight of the evidence and the probabilities favor that we're going to break down and head lower and test this low at the half square in the 33,400 area. Nothing's changed. It's heavy. It's failing. It's just a matter of when we're going to break. I don't know if you see anything different here or you have any different interpretation, but structurally and based on our squares and the geometry, it just looks weak.
Yeah, I think. Well, we'll wait for the trend line break. I think that'll kind of seal the deal.
Mm-hmm.
If it breaks or holds. If it holds, I think we can probably compress a little bit longer,
Right.
and then eventually break to one side or the other. But yeah, we're below the square, so it's definitely mushy. We'll see.
The other thing I did was I restarted this count off of the high that we made there, and this weakness could last if the counts hold into the first week of June. June 6th would be another 69, 70-day count.
Mm-hmm.
But something to keep in mind. Maybe we go down and make a low in there, and then can start building a base and seeing what happens. So anyway, Bitcoin is confirming the risk off mode. Let me kick it over to you to go over the big five. There's a lot to cover. We had a lot of movement in the dollar, bonds, equities, gold. I mean, there's a lot going on. So let's get into it and see what the charts are telling us.
All right.
There's the ES. That 90 is looming large.
Yes, for sure. Well, two 90s. We got the 90 up here in time, and we have the 90 in price, all coming down in this corner, right into about the third, fourth time frame.
Listen, in the markets, we don't always get what we want, but we can certainly ask. Wouldn't it be great we get a plunge right into that time, that May 2nd, May 4th, May 5th area?
Yeah. And no, because the highs are kind of spread out over 3-4 days. So this is possible. This is off by 3-4 days. So, but it brackets next week.
Yep.
No matter how you slice that.
Next week is big. I mean,
Yeah.
There's a lot of cycle hits and a lot of timing, just a lot of things coming in.
Mm-hmm. All right. So to pick up from where we left off last week, and you guys, if this is the first show, I would say recommend that you go back and take a look at the last few shows, so you can sort of pick up the thread from the last show. Every show we kind of pick up and go. If you guys go back a few, then it's easy to do that. All right. We left off with two numbers last week. One was 44.50 and the other one was 42.75. And the key being that if we can somehow settle above 42.75, that we would have a shot at testing 44.50. And clearly we couldn't really get above 42.75, and we failed. And in case of failure, we were expecting a test of the lows, which we're more or less getting as of Friday. And a full square down would be around 40, let's just say 4070, 4076, let's say. We have a line already drawn in here. And what we're looking for next week, given that we've been just sort of bleeding the entire since the beginning of the year, really.
Mm-hmm. Yeah.
And we're coming into a 90 count. It's probably a good time to look for some kind of a consolidation or some kind of a counter trend attempt in the middle of all this. I would say this, we're going to move this zone up here from that we were watching, and I'll move it down to around the square of 90. And that sets it up around, let's say, 4075. So this zone here, give or take a few from 4075, 76, that's the area we're looking for support. And you can clearly see that would also set up a potential false break off of the low we had in February. So it's a time, all this, last few weeks, it's been sort of easy trading. You look for the counter trends and you look for resistance. We've been selling those. But now we're getting down closer to completing the square around 4075. So we have to be a little bit alert here. It can get a little tricky. The basic stance is that if we get down to 4075 area and then manage to do a false break and start getting traction to the upside, I think then we'll have at least a few days of upside. Well, a few days, and depending on the strength of that, we could even go a little bit longer, given how long we've been sort of bleeding over here onto the downside. Now, on the other side, if we sort of get under 4075 and unable to get back above, I think that's going to be troublesome, and we'll probably get down to 4,000 pretty quickly, and then 3896 areas really the next support that I have. Does that make sense, Ben? Did I lay that out okay?
Absolutely. I mean, I think the key thing is that just because we're at the square doesn't mean it's going to stop going down, but it's a time to be alert for potential reversals if it holds. And if not, it could accelerate if we get stuck under. I mean, that's the key thing with the squares. It's not a guarantee. It's just a decision point.
Right. Exactly. Because there's potential for a low around these squares. I think we'll probably have more than one level to watch. So that's why I put up a little zone here. So 4075, give or take a little bit, and you guys can sort of mark that off. And if we somehow get under that and not able to recover, I think then this 3896, 4,000. And then if we slip 4,000, then down into 3896. So the level around 4,000 is really, what is that? 3990, 3987. And I would say that looks to me like that would be the max downside extension here before we do a decent counter trend. So those are the levels to watch. Let's take a look at the weekly. Weekly, we have this box up here marking off the last run down, and we've had 1, 2, 3, 4 weeks down. So it's getting pretty close. In the fifth week, we should probably attempt some kind of a counter trend, unless we're in some kind of a complete crash scenario. So I would watch those levels, and we're coming into some kind of a little bit of support here. So it's possible that the market gets a little dirty and little sloppy and choppy around these levels. Other than that, I think the pressure is to the downside till we hit one of these levels, which I think probably Tuesday through Wednesday, we ought to probably be able to hit one of these. And if you guys want up-to-date numbers, we post them every day on Twitter, so you can follow us. It's in the description below the video. You can check that out. And we also put all these levels on a spreadsheet, and that's linked to that is also in the description. And if you like our work, of course, feel free to hit the like and also share with the other traders. And yeah, I think that's enough for the ES to keep it simple. And I'll update if there are any changes on Twitter. So we'll be covered that way. So just to kind of summarize it, I might have been all over the place on this. We're looking for 4075 area to be support, and the support zone goes from about 4092 to about 40, let's say 65, somewhere in there. So that's the area to watch. So it could get a little dirty in here. Now, if we can get traction there somewhere and start rallying, and that rally has good support volume wise and stocks and everything else across the board, then I think we could probably mount a good rally to go retest some of these levels above. And if we don't, then I'd expect a test of the 3990 area. And after that, if we fail that, then 3896 is a major support. The key for me next week is to see if we're going to get some counter trend next week or not off that 90 move,
Right.
especially with that 90 by 90 coming in the middle of the week.
Mm-hmm.
If we get the square and we started, we get some kind of traction to the upside, then we have to trade that and let it be for now till the next turn down. That's not the end of the leg. I mean, end of the move will just be another counter trend. So we'll have to trade that out that way. But in case if we get below that 4072, that area, 76 area, then I think it opens up the downside on the weekly to, opens it up to this 3896, 4000, this area. Mm-hmm. So this 3896, to get, go more detail, that's half the size of this box, this full box, which is like full extension of a leg. This is half a box. And if we're really going to do this, ultimately, the full support would be around 3570.
Sure.
So we'll see. Maybe not so soon, but never know, right?
You never know. It could be a crash target. The interesting thing too,
it's good to have these numbers on already in place.
We do the monthly show, and we'll be recording that next week, but where we review all the monthlies. I was looking at the ES monthly, and this month's close for April is the lowest close since March of 2021.
Right.
Which, someone would say, oh, what's the big deal? It's only about a year ago. Well, all the price action, anybody that bought since then that has held is underwater. Right now.
Right.
So that's pressure. And we're going to see how it comes to bear. If we can find support in here, obviously it's not going to be a big deal, but if we lose this support and start, making progress under the 90 on that daily, it could get slippery fast.
Mm-hmm. And looking at this move, I mean, we got to have a decent correction, and I don't think this is really quite done yet. So, but we do have to be careful about the wild counter trend. So,
agreed.
And those start around squares, so that's why we have to really focus on the daily levels that we talk about. All right, moving on to bonds. We put this sort of target box a couple of weeks ago. It was 216 degrees down, and the market managed to reach into that zone and then mount a little rally. And last week we pulled back right after that 140 level that we've had as a support level. And next week we'll see. I would have liked to see it complete the square at the 216 level. That would have been nice, which would be around 137.5. But markets aren't always that perfect. So it's possible that we go back and test 146. So we're kind of watching. I think the strong part of the leg is probably done. And now we're going to wait for a little bit of a counter trend, or that could be a counter trend to test up in the 146 area, or it could be some kind of a consolidation. And I'm guessing it's going to be around this 140 area, give or take a little bit. So not much to trade here for a setup, unless this 140 level holds and we get a decent setup on the intraday on a 4-hour chart or something. I'm just kind of watching this and looking at the weekly chart. Here's another reason why I'm kind of watching it, because we came barreling down towards our target. I know on the weekly basis, it was around 141 and 1/3 of the next square is around 138 and a half. So that's the green line, and you can see how we came right to the 1/3 of the square and stopped. And now we're between this 141 and that. So we have this little zone here, which is sort of a support zone. So I'm picturing something like this, where we kind of consolidate and sort of, rebalance. And now that said, the lower we kind of consolidate, if we can't even get above 101.03 over here, 101, let's say 141, I would say that's going to point to further weakness. And if we lose the low from the, this for the year, well, that opens up the rest of the square to the downside. And the first target being around 132. So I'm watching this, it could be a little bit of a pause. And I'm watching the lows being, if the lows are going to get taken out, or if we can hold about 141. But, overall, the trend is clearly to the downside. So it's sort of a pause moment to watch what's going to happen here, mainly because it's already gotten some of our targets. So if that makes sense.
Yeah. And the pause also could be related to this sort of a risk off bid in bonds, just as people raise cash and go to safe havens, bonds may be catching a bid here short term. So it's all the more reason to watch it compared to, where we are in the equity move.
Exactly. So we'll see how that goes. Crude is the easiest chart these days to trade.
I'd just be bullish.
Yeah, just be bullish. I'll be done with it. So we're on the weekly. Let's start off on the weekly. We're 90 up. So this level was, key level for us. And that turns out to be around 96, 97. So the idea was that what we've been talking about the last few weeks is, initially, during these last couple of years, that was an upside target. So, and then once we broke it, that became support. So that's a short story, quick story, right? And so long as it's above that, we're bullish.
It's a perfect example of what we were talking about with ES, right? As it approaches the 90, you're looking to see if the high is going to come in.
Exactly.
And here it said, nope, we're not done yet. It went above and now it's sitting on top of it. So it remains to be bullish, continues to be bullish.
Right. Now leave all these things on the chart. This is from last year or a couple of years ago, this zone here. You can see how we came into it and we got above. This is what we mean when we say stay above, get above and stay above. This is kind of what we're talking about. You see how once we got into the zone, corrected a little bit, got through, staying above, right? Rallied, stay above, rally. Mm-hmm. So this is what we mean by, you take a level and then you hold above it. This is the idea. That's the pattern, right?
Or sometimes on Twitter, we'll talk about clearing a level. That's clearing the level.
Yeah. And here it's the opposite. We got under it, we're holding below it, can't get above. So, okay, getting back to the daily, let's take a look at the daily crude. We had the 102 was initially the level kind of we were watching to hold above, but it's funny how the market finds its own sort of vibration or the own state harmonic, So 102 clearly was right in the middle of all of that. What ended up working was that 97 we've been using for a while.
And your half square was working perfectly.
Half square, half
on
square.
The upside.
Mm-hmm. And so we're in this big triangle. Looks like obviously it's going to, I don't know if it's obvious, but looks like it's going to clear to the upside. And the way we measure that is to see if price will hold these levels. And 97, 95, 97 is a key level that we held for the last couple of weeks. So the next key level is the half square, which is around 107.50, let's say. And that's where we get that. So if we clear that, it opens it up to go back and check the other highs and maybe 135 for the next run up. Now, if we can't get above 97, then I think we have a whole nother thing going on, and it's a longer process. Mm-hmm. So that's a easy way to measure it out.
Agreed.
The other thing about those highs, it's 50% from up here, but it's 90 from the December lows. And you can see that's why it's banging up against it. So once we break this 90, it opens up the entire square to the upside, like it did here. That was
Just
a
like
bit of a
that.
panic, but maybe it'll be more orderly this time. But what you notice is you see how it's not selling off, right? So it just keep banging up against the 90-degree level. So that's the key there. And we're holding well above the support zone. Yeah, we dip into it every week or so, every couple of weeks, but it's been bought up. And so that's sort of the box it's trading in. And this 107.5 level is not just because of these two highs, it's really the 90 degrees up. So we're looking for a break. Stronger markets about 107.5 and holding firm above 95, 97.
It looks good.
Yeah, that looks pretty good. Let's take a look at gold. So gold, we've been watching, we were hoping it'll hold between 1915 and 1940. That's sort of our zone. And you can see, over the last few months, there are times when it will spike below that and hit the next support level, 1887, and then it'll eventually rally back up. So it's kind of in this big old holding pattern. And so last week we came and checked the highs from November of 2021, and also this 1887, pushed down, but you can see it gets bought up immediately, and we pushed up against 1915. And for gold to be ready for another leg up, I would say this 1915 is really the key to watch for a balance. If we can get above that and hold, or not. So I think if we don't, we might be putting in a new zone between 1887 and 1915, right? That could be another bracket, different color. So we'll have to watch that. And we're bullish on gold. We've been. And the story here is just kind of waiting for time to show up. Right now it's in consolidation and looks fairly bullish. It's holding the right levels. Yeah, this was a little bit of a push, but it really didn't get under it. It was more of a false break to clear out these lows here. That's kind of how I see it. And it rallied right back up. And looking at the weekly gold, again, we have this box. And we've been more or less holding above it. Last week, I think, like you were saying, Ben, to raise cash, they were selling commodities across the board. And
no question. Again, last couple of weeks, I've seen it.
And gold was no exception. Got hit, but the difference is you can see how fast it got bought up, right?
Yeah, all those candles down into the box have long wicks on them.
So it was back, trying to get pushed back above 1919. And so long as it's above, let's say 1881, it's bullish, it's firm. It's just waiting for time to start moving. So bullish and waiting on pause.
Yep.
And mind you, we're well above that, the lower fork, right? So it's not like we're in a weak bull market. Otherwise, we'd be coming down here to visit often, which we hadn't. We're up here now. It's very bullish. Next, we have the dollar,
which is one of the causes I think that's keeping gold down.
Yeah, gold. Exactly. And oh boy, right? Look at this. We had 90, square of 90, like you guys have seen. We use 90, 72 quite a bit for targeting, and we had 101 as a target for a long time, and that was right up here. So the normal idea, like we say, if we get through a level and we hold above it, it's bullish. If we go tap a level and we kind of bounce off of it, and consolidate below, it's a little bit weak. And in this case, we broke above, one counter trend, and bam, we're off to the races, and we maxed out. And we have 1/3 of a square of the next square, right? 30 degrees up from the 90. Around 104. So we almost went to that. All I can say now is, listen, long as we're above with this 101 level, this is all in bullish territory. So we do some kind of a blow off or blow out and finish this off in grand style. And it looks like we're getting ready to do that. So let's see how that plays out. Key level to watch is 101. And the idea being that as long as we're above that, it's in a strong position. See, it even blew through the ABCD. It's very strong, very strong. All right, let's take a look at this channel, right? This is orderly movement. And we're like, just
Yeah, that's the kind of pattern we're trying to pick up on all the other commodities, right? Where we see this sort of frustrating grind, but then it starts showing you higher lows and then it takes off.
So I'm guessing, looking at the price action, I think we have more to go now that we cleared that 101 area, which was also the half square from the lows of this year's low. And that would, completing the next square would put us around 106, 107. So I'm thinking if we hold up here, we're probably going to go up and visit that. So that 101 area, again, this is where we get that coming off of the 2020 lows. And we cleared it in a strong way. And I don't think we've really gotten to any kind of major resistance yet. Although we did do a sort of double top into this, right?
Mm-hmm.
Double tops never hold. So that's our in commodities. So this is probably going to get taken out. And I'm looking at that 106, 107 level looks pretty good.
Barry, here's another great example. I think we've had 3 or 4 this week of how we approach the 90, and you can't assume it's just going to stop, right? And stop and sell off, right?
Right.
It stalled there for a week or 2, and then boom, gone.
Mm-hmm. Well, then that gives you time to prepare, get your trade set up for the next leg. These are great points to watch. And I mean, look at what happens at the 50% square, right? We came up into the 50, tested it, kind of consolidated above, right under it.
Yep.
Bam, shot above, held above, right? This is what we call a hold above level, right? Came back to retest, and there was a leg up, bam, right into the 90, 45 degrees up. And now we cleared that without even
not even a hiccup.
Without even a hiccup. So we're probably going to go higher. It looks like at least 106, 107. So it looks like.
And that's panic price action on the chart, isn't it?
Yeah, I think so.
Either forced covering or panic buying, or there's some sort of emotion involved in that part of this trade. It looks like.
Right. It's a good one to watch. It's a good trader. Currencies are moving, and this is the time to, really get some mileage out of those trades. And I think it's probably going to take out this 270. That's at 104.5 or so.
Right.
And if that goes, we will open up to 110 in the big picture, right? So this is the basis weekly. So yeah, we'll leave it at that. Bullish for now, till further notice.
Okay. Agreed with that.
Yep. Well, while we're here, let's take a look at the euro.
Man, you've been calling the euro to perfection with the levels too.
It's been yeah. Well, it's been kind of easy. Also.
Really good levels.
Well, we got to the 90. We talked about how this low is going to be checked without a whole lot of trouble, and we did get into that. And now that become this far, and we, not even a hiccup, like you say, not even a hiccup through 90. So it looks like we're going to be testing the December 2016 lows, and so I would wait for that.
Yeah, we had a close under the 90 too on the daily, right?
Yeah, that's the thing. We got to close under the 90, and coming down to 70 off the 2008 highs. So you can see we got under that 270. So this is weak territory. And so it's possible that, we did 288 coming off that 2008 high. So it's possible we go and check this again. We're not quite there. I think when we get down to those lows, we're going to watch for possible false break kind of a scenario, just like we had it prior to that. You can see how we had a false break and a quick turnaround. So we're getting into that neighborhood. I tell you, the thing to watch is if we don't get a false break here, oh boy, right? We open up an entire leg down going into,
You're going to get to parity and below.
Parity and below. And below is not, out of the question at this point, the way this is going. But first things first, we're looking for a check of the 2017 lows on the euro. So looking at the daily.
Getting stuck under that half square, man.
Yeah, well, before that, you can see how that happened. Remember, we talked about this last week, right? We broke down, held around the 108, and rallied up and failed right at the square. So the square is like on fire. It's working really well. And we sold off. And again, we got stuck. Friday high was exactly at the 50%. So if we can't really make a whole lot of any traction above that, we're probably going to go back and go down to 216 degrees down, which is around 102. So little steps going down. I don't think this is done. I mean, we had a chance to stop it, right? We had those targets that came to be in place, but they got taken out. You can see the 90 coming off that high, same thing. We came up and tapped it. So unless we get above this right away and, go back up to check 108, which I don't really see happening anytime soon, but
It's vulnerable.
yeah, yes. Otherwise, we're just in really weak territory with lots of downside opening up. All right, so
It's like a wounded gazelle on the savannah.
yeah, it's big. It's
The
big
the lions are circling.
And it's been trading well, consolidating and dropping, consolidation, dropping. So all I can say is everything's moving, trading well. I like volatility. We need it. And, it's better than dead markets. So
No question.
and this is the time, and all the levels work really well. All the tools work well, and markets are moving. So get out there and
Make hay.
do well.
It's time to make hay.
Yep. All right, let me put it on to you.
Okay. Good. Great review. Great review.
Thanks. Well, NASDAQ looks like it's getting close to support.
Close to support, but unfortunately, I think the odds favor that support's not going to hold. We know the story here. This grid has been working to perfection. We see here's a perfect example at the highs of getting stuck under, then it pokes up and fails, and it just keeps doing it at each level. First time here it held, bounces up, cuts through, comes back and tests, fails, comes back and tests, fails. And here we are at the lows of the year. These are the Friday lows, that we were making were the lows of the year for NQ. So the story is weak. Selling bounces has worked. We are coming into support on this full square in the, call it 12,750 area. What I have done is I've put in an ABC sort of from the all-time high in November, because that's what I think the minimum path we're on right now is looking at if it's not disaster scenario, we'll just do an ABC, and an ABC gets us down to the 11,400 area. The steps to get there: first we have to deal with this square. If we lose this square, let's say we plunge under and then come back and test, then it goes to the half square. If we lose that and stay under here, then we make it down to the full square, and how it pushes a little bit above or a little bit below almost every time. That would complete the ABC. Under the really bearish scenario, this could be a big 3, and then it's not just going to do equal moves, it's going to do a really, really big move. I think right now where we are in time, first week of May, a lot of timing, a lot of cycles. Barrie was reviewing the 90 on some of his stuff, and I've got a lot of stuff coming in next week. What's more likely is some sort of plunge or clean out here, and then hopefully we can set in a low that gives us a decent trading setup. The NQs have been leading. They were leading on the way up. They're leading on the way down. So I think the setup is we'll watch this closely, see how we handle this full square. I think odds favor we're gonna slice through it and get stuck under, but we'll let price dictate what we do here. And if we do put in some sort of low, hopefully it's on support, whether it's the full square, the ABC, the half square, and then we can see what things look like going forward. I know you've been all over the weakness in NQs. Anything else to add here?
No, I think that's you covered all the points. and I would just watch for a potential false break. Other than that, yeah, watch that level and see how we do.
Yeah.
But we're in a false break kind of area, so that was the only other caution I would say.
Yeah. And the thing that bothers me about the false break here is you had, so far 3 opportunities to rally off of it. We tried one time and it was looking like a false break, and then Friday just wiped that out.
Right.
So it still could happen, but the odds when you test it multiple times and can't rally off it, the odds go down that you're going to do it successfully. So we'll see. We'll see what happens when the futures open Sunday and we start trading regular hours on Monday. We'll know pretty quickly what we're going to do here. Looking weak, I think it continues to call for probabilities continue to call for lower prices, but we'll see what we do in this important time frame that's coming up. Now let's go over to the commodities. Before I switch over, the interesting thing, last couple of weeks I've been talking about how there's not a lot of setups there. There seems to be liquidation, and the liquidation is not turning the charts bearish. It's just not creating the bullish setups that we like to see to get in them. And so what it looks like is, in reaction to the risk off in other markets, people are sort of selling their winners and harvesting some of the cash and raising cash in the commodities that have had really good runs. So this week is no different. Of the 3 commodities I'm going to talk about, only one is actually in a bullish setup. The other 2 are potential bullish setups. It's sort of a little early, but I wanted to show you, how we look at it and, why it's on our radar for a potential, bullish setup. So overall, bigger picture, and we're going to talk about that on the monthly show, but bigger picture in commodities, still very bullish. Last 2-3 weeks, signs of liquidation. I think it's profit taking. I think it's cash raising. I think it's, in reaction to the risk off in the credit markets and in equities. We're seeing selling in the commodities, bottom line. The first one we want to look at is gold. Very covered gold. Very bullish on gold here. I think it's in the middle of a correction. And it's in the middle of, this sort of risk off, cash raising, profit taking. When they tank the equity markets, they sell everything. And gold has not been immune to that. This low here that we saw this week on the 28th is a good low. There's, price and time relationships there. You can see the half square here, both from a time and price standpoint. As long as this low holds, I think we have a bullish setup, potential bullish setup in place. We saw a nice rally starting on Friday, and then when they started dumping everything, they dumped gold too and sold it off down near the lows of the day. So we got to watch and see, do we get another higher low? But if you look from August of last year, look at the series of low, high, higher low, higher high, higher low, higher high. And now we have another higher low, provided that this can hold in here. So the pattern is good. It's rounding. It's showing higher lows. It's showing accumulation. We just got to see if the dumping of everything continues, then we may take this out, and we may have to look at trying to see if this longer term support from last August holds and not the interim one here. But I like the gold. Barrie reviewed it as well, and it's very bullish. On the monthly show, you'll see the real bullish long-term view on this thing that, over the next few years, we should see significantly higher prices. We're just trying to figure out where to get in here for additional positioning for the next leg up. And that's kind of where we are in gold. The other thing, I think Barrie mentioned it, but I want to point it out. Not only did we stop on the half square, but the low here is sitting on top of the highs from November. And that's, just basic market structure, but it's really, really important. If this holds, it's sitting on top of all this price action. And that's bullish. So that's gold. Gold we're watching. Nothing to do yet, but I wanted to show you the setup and let you kind of see how the pattern is playing out. We need a few more pieces of information here, most notably to see this low hold to say, okay, short term, it's time to go. The next one is actually bullish and ready, in my opinion. This past week, I put out a couple tweets about crude and hey, it's time to watch crude. Keep your eye on crude. Things are shaping up. In my opinion, with the price action this past week, even though the dumping we saw on Friday when risk off was happening, crude just looks good. It looks ready. We broke a downtrend line. We're sitting right on a full square here in this 104 area. As long as we can stay on top of that, and then short term, I think we should move swiftly. Even if we pull back, as long as we get another higher low, which we've seen a series of them here, we should be in good shape. Again, the bullish pattern, the thing that caught my eye, and I started talking about it a few weeks ago, was made the low on the full square, false break with a previous low, sitting on top of, this structure here. And this test hasn't even come back to this previous high here. We're well above that. So much like Barrie's level, this is 93, 94 area. I think you were 95, 97 on yours.
Right.
This was the extreme false break low. And then we came back here with a higher low, in the 95.5 area, moved up nicely off of it. So again, I think crude's bullish. I think we're going to push. First stop is the half square in the 115, 116 area. Then we test the full square, in the 127, 128 area. And if we go, I think, odds favor we're going to take out these highs and really push. And you'll see that in the monthlies on the monthly show when we review. Last one on the commodity side is coffee. The key thing with the coffee chart and why I think as long as we can hold this area, it is very bullish. And this is the level that Barrie and I have been talking about for months now. This is this 212 area. As long as we hold above 212, you can look left and see why it's really, really bullish. It's the July and October highs of last year. And so we had this move up, we've pulled back, and now we're starting to make higher lows and higher highs on top of a very, very critical support level. To be safe, I would wait for a break of this trend line and a clearance of this half square in the 230 area. If we do that, I think we're well on our way to pushing to new all-time highs on coffee. While we're in this triangle, we're just seeing some sharp up and down here. But 212 is the key on the downside, 231 area is key on the upside. As long as we're above this 212, I think the resolution will be bullish and higher prices in coffee. I know you like coffee, Barrie. So what do you think? What do you think of this chart, and what do you think of the setup here?
I would say it's getting close.
Mm-hmm. Yeah,
And
not quite there, but close.
quite there, but yeah, it's getting close. And I think, well, just be patient and get in and add positions as you can. Break of that trend line is the key next event to watch, and that half square level.
And this is all I have for you in commodities, because as I said, there's been liquidation over the last few weeks. I think it's related to risk off. I don't think it's anything fundamental with these commodities. Bigger picture, they're all still very, very bullish. I do know that the coming week is really important cycle-wise. Multiple hits all week from the 2nd to the 5th. So we're going to be watching all these markets very, very closely to see if they turn, and put in bottoms or tops, or accelerate, the current trend that they're in. Because as we talked about when Barrie was reviewing those, 90 squares, both are possible outcomes. You have to really watch the price action. Do you get above levels and stay on top of them? Do you get stuck under levels? And that's going to be our guide. And I do think timing wise, there's a lot of markers this week that are going to make it an important week in determining what the next trend is going to be for many of these different commodities and different markets we follow. Anything else in particular you're watching this week, Barrie?
Well, a lot of these things are hitting, targets or squares, and those are the things I'm watching to see, if we get some kind of a change in trend or continuation, which sounds like the story every week, but this week, because of this, a lot of the squares coming into play, that's sort of the main thing, and that applies to bonds and crude and the S&P.
Right. And it doesn't happen every week that we get this price and time. So
exactly.
This is a big week because of these price and time relationships that are coming into the gun sight. And so pay attention to the markets. We'll be tweeting, we'll be, updating things that we see, but a lot of price and time, potential price and time relationships are going to hit this week. So, could be an acceleration, could be a turn. We don't know, and we go in without a bias. We just go in saying, let price tell us what it is.
But we're in that window. That's the thing.
Absolutely. Yeah. So have a great week, everybody. Barrie, have a terrific week, and we'll talk soon.
All right. Good job, Ben. Thanks everybody.
Bye. Bye.